Good morning. This is Japanese Economic Review Channel. Today, we review the dramatic market events of yesterday, March 30th, 2026. The global financial landscape was rocked by a massive shockwave, triggered by escalating Middle Eastern tensions, leading to a severe sell-off in Japanese equities. We will analyze how geopolitical risks transformed a fundamental-driven market into one dominated by intense risk-off sentiment. Yesterday's macro environment was defined by significant contractions across global indices. The Nikkei 225 closed down 1,487 points at 51,885, while the TOPIX plummeted by 107 points. Middle East instability triggered a massive risk-off wave, affecting over 90% of the Japanese prime market. This widespread decline underscores the market's heightened sensitivity to renewed global inflation fears. The origin shock stemmed from critical escalations in the Middle East. Yesterday's volatility followed a Houthi ballistic missile attack on Israeli military facilities and reports of the U.S. considering ground troop deployment in Iran. Consequently, NY/WTI crude futures spiked on supply threats, igniting fears of an inflation resurgence that triggered intense risk aversion across all high-beta asset classes. The global impact was immediate, following a weak lead from Wall Street where the NY Dow dropped 793 points and the Nasdaq fell over 459 points. We observed a distinct vulnerability in high-beta tech holdings. Major companies like ARM Holdings, Meta, and Amazon faced heavy selling pressure as investors retreated from long-duration assets in response to rising inflation risks. Yesterday's intraday chart revealed a flash crash at the open. The Nikkei 225 gapped down to a low of 50,566 by 9:13 a.m., a staggering 2,806-point drop from the previous close. While the afternoon saw a recovery to 51,885, it is vital to note this was largely driven by technical short covering as U.S. futures paired losses rather than robust fundamental buying. Market breadth was overwhelmingly negative, with 32 out of 33 industry sectors declining. Financials, manufacturing, and transports, including giants like Toyota and Honda, were hit hard. The sole exception was the oil and coal sector. Shares of INEOS and Idemitsu rose as a structural hedge against the Middle East crisis and soaring crude oil prices. The Growth 250 index plunged alongside the broader market as speculative assets suffered immediate liquidity drains. Notably, iSpace hit its daily lower limit down, triggering a chain reaction of selling in other space ventures like QPS Holdings and Synspective. Even recent IPOs like Siwa Holdings experienced extreme intraday volatility, reflecting the heightened risk in growth segments. To summarize yesterday's breadth, 1,436 stocks declined while only 85 advanced. Trading value on the prime market reached a massive 7.90 trillion Japanese yen, indicating intense panic-driven turnover. In FX, the yen showed safe haven strength, with USD JPY falling to 159.64. These figures confirm that March 30th was one of the most liquidity-intensive risk-off events in recent history. Despite the market chaos, the real economy demonstrated resilience through steady innovation. Hyoki launched its Aldous E system for hydrogen evaluation, and Weather News released a maritime weather dataset for shipping markets. In retail, Fast Retailing and Morinaga Milk proceeded with new product launches. These activities act as bottom stabilizers, reminding us that corporate R&D remains unhindered by trading volatility. In conclusion, the March 30th shock signaled a transition to a headline-driven risk-off environment. While geopolitical unpredictability and inflation are major headwinds, the underlying corporate innovation and resilient U.S. futures provide a necessary floor for the market. Over the next 10 days, the market will remain heavily tethered to crude oil pricing and Middle Eastern diplomacy. Thank you for watching the Japanese Economic Review. We look forward to having you with us again.